Some people think that we're in a brand new bull market because the S&P and the Nasdaq are up 20%. So a lot of people are saying it's a shiny new bull market. Well, there's some indications that this may not be the case. The truth is, just because the market has gone up 20% does not mean that there's an all clear that you're safe to go and you can just buy and not have to worry about it and there are no more declines. The truth is, this has happened before. I believe in the year 2000, and I think even in 2022, I think the market even went up 20% before going down further. Oil and some commodities like copper have been in a downtrend, and that's kind of an indication that a recession may be near. New Zealand is actually in a recession at this moment, and China has actually been underperforming with their recent opening, which indicates that things are starting to weaken into global markets. Even Taiwan, I believe their semiconductors there's been a huge plunge in demand for their semiconductors. So I think that's another indication that there seems to be a recession on the horizon. Cryptocurrencies have not really been following this rally. They've been limping along. They're not really going to the moon like the stocks like Nvidia and a lot of the AI stocks. That's kind of interesting that crypto is totally very muted during this time period of a lot of bullishness. Tether, which is a stable coin, it broke the peg and it's below $1. That kind of indicates that there may be a general lack of liquidity that's taking place. A lot of Americans will have less discretionary income in their pockets to spend because they will have to start paying back their student loans. That's going to come out of their pocket. They won't be able to pay for all kinds of goodies, and as a result we may see the decrease in demand as a result of that. Another thing that may happen is as the Treasury starts issuing a whole bunch of Treasury bonds, maybe more than $1 trillion in over a few months time period, that may also bring about a general decline in the stock market as there's a lot of liquidity being sucked out of the system. A lot of people don't realize it though, but when the Treasury starts issuing a whole bunch of treasuries that they sell, it's almost a form of quantitative tightening. That also sucks a lot of liquidity out of the system that will push stocks down, and crypto as well. A lot of commodities, including, I'm reading this because it's a long list, coal, natural gas, nickel, they've all declined dramatically, and that's really a sign that there's less demand for pure commodities in the world economy. The economy is slowing down, and it takes a while for the stock market to price this in. Another reason to question this bull market, so-called bull market, is that forward earnings for S&P are around 17 times earnings. That's not exactly cheap. It's not super expensive. It's not 22, 25 times earnings, but even at 17, it's not necessarily cheap. So it's not necessarily the best possible time to buy equities. It seems like one of the best analysts out there, Michael Hartnett, says that this feels a little bit like it reminds him of 2000 and 2008 in the sense that it just seemed as though there was a big move up before there will be a big move down. Another reason I'm a little bit skeptical of this rally and wouldn't be buying in is this on terms of extreme greed or extreme fear. We're in the extreme greed stage. In the extreme greed stage, you get a lot of stupid buying that's almost irrational. You see a lot of people buying on leverage, and you oftentimes will see that these are when tops are made. I don't really want to buy during a time period of extreme greed. That's usually a mistake. You're usually going to find that you really are buying closer to at least a near-term top. I'm not saying that it'll never go up again. Just saying that it's probably not the most ideal buying point. Remember, value is what you get. If you buy at the right time, you get quite a lot of value. And it doesn't seem as though buying at 17 times earnings in a time period where we're just about to head into a recession doesn't necessarily seem like that's the best possible time to buy. But that's my view. I actually am a big believer in trying to at least time the markets. I think crypto it's kind of showing, it's kind of interesting that crypto is kind of indicating if there's this risk on sentiment, and the fact that people are not going back into crypto is an indication that maybe this rally is short-lived. this rally is extremely narrow right now. This is actually one of the narrowest rallies on record. That's really not necessarily the best time period. You would hope that in a real bull market there was at least some movement up in the average stock, but the average stock looks like it's in a super downtrend. There's no indication that it's really going up. I mean, there's just a few stocks that are pulling the entire index up, and I know that people have said, oh, that's always been the case, but this seems to be literally the most narrow on record. I don't know if I want to get too excited when it's just a few stocks getting excited about AI, and maybe that I do believe that AI is very transformative and it's going to improve the economy, but I just don't think it's going to happen quite as soon as people think. You have to remember, the internet changed the world too, but it didn't come immediately. People priced it in a little bit too quickly in 1999, and they got burned because they just the market was pricing it in a little bit too soon. It took a little bit of time before all these wonderful benefits could happen. Anyway, that's my view of the stocks. I'm still bearish. That's my view. I want to know what you think. Let me know in the comments below. Hit the like button if you learned anything from this video, and subscribe, and I'll see you in the next video.